Happy New Year, traders. I hope you had an amazing New Year's. A lot of changes upcoming and a lot of plans going forward with the trade floor. This is another weekly recap. So the first change you might notice is that my voice sounds a lot better. The thing is, my beautiful voice always sounded amazing. It's just that now I have the proper microphone for you to be able to hear that. Another big change that's coming in 2022 is that I will be doing the small account challenge. I'm going to be going back to a $10,000 account, and I will try to grow that account throughout the year. So that's going to force me to take only the best trades and then size in on the best of the best. Looking forward to that. Trading has been a little slow lately, but that's okay. That gives time to reflect and to refine setups and be patient. It's not a bad thing. It's just you have to go into a different mode. You have to use your mind to force yourself to stop being in the aggressive trader mode and go back to the chill retire trader mode. I know it sucks not making money, but that's just what you got to do. It is part of the game. Going forward, you will be getting this amazing audio quality, and you will also be getting, at the end of every video, a breakdown of my trades, my P&L, and also how I journal and review my trades. So going forward, that's going to be the format. It's still going to be the same charts that I will be reviewing in the same format, but just a little bit more content at the end, because as traders, we know that the setup might work out, but we might mess it up. So there's a big difference in seeing the setup after it happened and actually performing well on the setup in real time. There's a big difference. So without further ado, we're going to jump into the first setup of the last week of 2021. Aehr happened on Tuesday, December 28th, and this was a classic listed first red day short. I was getting short in pre-market around this area. Once it started gapping down, that was my indication to get in short, and my target was the low 20s. It did not get there, although I did cover in this area. I should have covered more, but I just thought it would go lower. This kind of chart kind of tells me that it had the potential to go lower, because in the past it's had these big red candles after a run-up, but I think I got a little too aggressive with the price target. Anyway, so after it bounced, I added some shorts again into the bounce and swung that into the next day. The next day, however, we got a gap up, so I got stopped out at, this level right here. This is pretty common on these stocks. You just have to choose the best stock to avoid getting gapped up on. So the best first red day setup. A reason I chose to short this stock on its first red day is because from its bottom run up here, when it first started putting in green days, to the top right before this first red day, it had a 58% run, and that's very substantial. So after a run like that, I would be looking to short the first red day. This stock didn't go smoothly as I thought. I got stopped out, but I did take some profits before getting stopped out. Second stock of the day. This happened the same day as Aehr. That was Tuesday, December 28th. And this was also a first red day. This was a first red day on Tesla. Tesla had this amazing bounce after it panicked to its multi-month lows. So it dipped under the 900 area, which is its support, something that was resistance early in the year that has become support. It dipped under though, but with big stocks, you gotta keep in mind that support and resistance is a range. So yes, it is a level, but it's not going to be a line drawn in sand where it's like, oh, it cannot break this level. and you can't view it like OTCs, where if an OTC breaks level, usually it's over with, most OTCs at least. But for big stocks, you cannot be taking that approach. You have to approach key levels as a range. So after it bounced off that support zone, it had a massive 26% rally until it had this first red day. And once it turned red, I got in on the bounce. I was aiming for a really substantial pull down to the 1020s, 1040s that same day. And I did not get that. Unfortunately, the most substantial pull that day was to the 1078 zone. Then it bounced, and the following day it actually ended stopping me out. This happens a lot on Tesla because I put a stop order on my shorts. So my stop was actually this first bounce. That's where my stop was. And it should have been the high of day, but I figured I would tighten up my risk. But this always happens for me. Market makers stop me out, and then Tesla does what I think it'll do. Very common to happen to me. Anyway, this did not actually go as low as I thought it would. Following day, it went to the 1060s. Day after that, went to the 1050s. I wouldn't have held it that long though. Tesla also had puts that you could have traded. This would have been a pretty decent trade.
The next stock is COIN, FRD short.
COIN had a pretty big run with Bitcoin once Bitcoin started to bounce again off its lows. However, COIN is the type of stock to rally big, then sell off big. We see these time and time again in the stock market where every big rally, it just comes right back down. So for COIN, I was okay with taking the first red day into this bounce here. Even though it was a long way from red and green, I was totally fine with shorting the bounce just because I know that COIN comes up aggressively and then it comes back down aggressively. So the bounce wasn't that substantial. It was only 21%, this rally before the first red day. However, my target was in the 260s. In the morning, I actually pulled to the 262 level. And when I shorted the bounce, I wanted that low day crack and then it to bottom out and get out there. And that's exactly what I did. The next day, though, it ended up perking a bit and then fading for the rest of the day to the 250s. So I could have swung this. I just wanted to take the meat of the move. COIN also had puts only monthly and they weren't traded very liquid. So I would have stayed away from those, to be honest. The last stock of Tuesday was a very busy day, as you can tell. The last stock was actually AABB. Now, AABB, I don't usually trade stocks under $1. I feel like AABB was an exception. It was just so mentioned in the chat, I just had to check it out. So for me personally, I use Interactive Brokers, and their commissions for stocks under $1 are insane. Like, they are not good at all. But when I saw AABB and the type of panic it had and how much it panicked and how the price action was going, I decided that I needed to take a shot. AABB was just super smooth. It had an intraday panic of over 58%. So you look at this high the day before at 33.36 cents. And the bottom during this day at 14 cents. That's a panic of 58%. And a panic that big intraday oversold with these volume spikes right here. This is very key. These volume spikes and the rate of panic here, this indicated to me that it had amazing bounce potential. Personally, I was not trying to dip buy it. I waited for it to bounce, and then I ended up getting it on a pullback. So my entry was in the 15s. And what I did after that, I just risked low of day, which is 14. And then I swung it for the rest of the day. My target was in the 20s, so 20 to 25.5 cents. And if you're wondering how I got this target, I used my own spreadsheet that has a target calculator. If you're interested in that, you can watch the trade recap for December 13th, 2021. I include that calculator as a free download to all my viewers. So here we see the panic calculator that I use. You put in the top of the panic here, so 33.36, and the bottom of the panic here, which is 14. And then you will get a target price. You will also get a chasing price. And then what you do with these is if the stock is bounced over this number, you do not get in. The risk reward isn't there. And this is just your target price. So this is where you want to get out. Keep in mind, this isn't a magic bullet. This calculator isn't perfect, but it's been accurate for over 70% of panics that I've tracked this year. And this is just another example. Because I do not trade stocks under $1, I was just reading the level 2. I got out too early here. This was below VWAP. I got scared up because the level 2 was looking a little heavy. So I got out in the high 17s. Like, I did not trade this like I should have. And then this went on to bounce to 20.63 cents. If we look at our calculator, his target price is 20.26. So it's literally, you're pretty much getting the entire meat of the move. You're getting a bit of bone on that meat. I'm just saying. So this calculator is a free download. This is the first time I'm actually using it to trade a stock that's under $1. It usually does not work for stocks under $1 in my experience. I only did this as an example, and just because the setup worked so well, just because the panic was so incredible that I just had to dip buy it. Pattern that I look for to enter a bounce short, and why I didn't was because this stock is just too low price to short. I mean, I could have done it, but I don't think the commissions and the borrow fees would have been worth it. Sometimes you have to keep that in mind before jumping in on a setup. Is this setup going to be worth it after the commissions and borrow fees and other fees too? That's a very important part of trading, because the setup can work out, but if it costs 50% of your profits just to trade it, the risk reward might not even be there. So the next setup happened on Wednesday, December 29th. And this was an oversold dump bounce short with negative news. The reason for me shorting the bounce was because it bounced way further than expected. If you use the panic calculator for this setup, using the numbers 845 as the top and 337 as the bottom, you get a number around 5. So 5 would be the target if you were playing the dip buy. I personally wasn't. A criteria for me to play the dip buy is the panic itself has to actually be over 77%. In this case, the panic was 60.1%. So it did not meet my criteria to dip buy, even though the price action looks like what I would expect from that type of setup. it had this massive morning squeeze. And then once it started getting above 5, which is the target price, I started to get in short. So this blow off candle right here, that is where I started to really slam it short, just because this was perking right through 550, and I was aiming to get in around 550 and then use 6 as my risk. So why would I choose a number like 6? If you see here on the daily chart, 6 is one of those key levels. You look here, you can see stock struggles at 6 here. It uses 6 as support right here. And then here 6 is also a support. And that was just because it was a round number. I saw this stock top off at 5. I saw the stock top off at 550 or around 550. So I figured 6 would be pretty apropos. Turned out though it squeezed past 6, so I got stopped out like a fool. And then I wanted to get in again, so I got in on the next wick that happened, just because I saw that this volume was blowing off again. So I was like, okay, I'm just gonna get on this one because the volume is more again. So got in, and then here I used 680 as my risk level. 680 is more of an arbitrary number. I really should have just chosen 7. Let's be honest. I should have chosen 7. I just didn't think it would get to 680, and I wanted to have bigger size. So what I should have done is just looked at the levels and then based my position size on that. So I messed up on that, and by choosing 680 as my stop, I ended up getting wicked out on this squeeze here. So literally ended up exiting my short at the high of day. And that was super annoying. And what I should have done is I should have exited some of my position when it wasn't coming back down right here. When it started going up again, I should have exited partial at least, just because that is not the price action that these stocks that work tend to have. But I got stubborn, stuck to my stop. Then after I got stopped out, I was like, nope, I'm going away from this, just because this is not the price action it should have. Okay, so now that we've reviewed the setups, now what we have to do is track our performance, because like I said, even when the setups work out, your trades might not be working out. And that is very true, and it's something you will notice very quickly when you're trading. You can have the perfect setup, but you mess up your executions. I'm going to go into an overview of the best trading journal ever, in my opinion. This journal has saved me 5 figures at least in losses, just because tracking what works and doesn't work is so crucial. Look, in the past, all I've done is trade on instinct and assume that I know what works and what doesn't without tracking the data. And believe me, that did not work. That led to losses upon losses upon losses. And after starting to use TraderSync in the beginning of 2020, I actually became profitable. And not just profitable, but my account went up to the 6 figures. I grew a $10,000 account into over $100,000 account. That is how big the difference was. Now, journaling is very important, but we all know that it could be tedious to do. We might view it as this big chore. In the past, what I had to do is just log in every single trade manually into Excel and then analyze it manually after I did that. And that just took so damn long. Now with TraderSync, all I have to do is add this week's trades. It's literally an Excel file you can get off Interactive Brokers or any other major brokers. You upload it into TraderSync, and then TraderSync automatically just shows you all your trades. Once you've done that, you can categorize your trades by setups, and then you can also add your mistakes here too. So let's take AABB as an example of a stock we want to look into. This is the type of data I'm looking at. I can even place my target price over here. If I want to go super detailed, I can place my stop price in here, super detailed. If you don't know what your target or your stop is, you shouldn't be trading. Those are so crucial because emotion just play a big part in trading, and you want to eliminate emotions as much as you can. The way you do that is by making your target and stop right as you enter your trade and sticking to that plan. So if you're bad at that, this is one way to do it. Seeing how many times you actually respect your targets and your stops. You also get a great chart showing you the actual trade. Now this is a great visual representation. And then you also have a running PL. So your profit and losses during the trade. How cool is that? I could have made $21, but instead I made 17. What a tragedy. I'm only showing you the current week just because I would like you to see my process here. The FRD listed worked out pretty good, I'd say overall. Kind of break even in a way because Tesla didn't work out. It kind of dragged the setup a little bit. AABB worked out great. Should have been more aggressive with my target. Let me add that here actually, because I definitely got out way too early. So this is how we do it. Bam. So obviously I can all see the calendar. This was my week in review. Red week, but fairly small red week. Losses of around $100 for this week, which isn't too bad. My current account is at $30,000, and I'm going to be doing the small account challenge for 2022. So next week's recap, you are going to see me using a $10,000 account. This is because I know that the market right now is slow, that I should be sizing down, and you know, when the hot plays come back with a force, I might consider, putting in more capital. But for now, using a small account and trying to grow it, I think that is the main focus of 2022 going into it, because this slow market can continue every single year between 2017 and 2020. It was very active in December and the winter in general, but 2021, very quiet, the quietest I've seen. I'm only going to be focusing on the top best setups in 2022 by trading these small account, and I'm going to show you just how much risk I'm taking in comparison to my account size. So you're going to see how much risk I'm taking right now, while other traders are using way too much risk to trade setups that just aren't there and they're blowing up. The way you survive these periods is still by trading, but by keeping your risk very tight, keeping very tight risk. And if things don't look like they're going to be shifting, you just keep your risk small and keep trading. You don't get frustrated and oversize and try to make a lot of money at once. That does not work. It's okay to lose small for a time. So with TraderSync, you see all these returns and all these data from your week. So you can analyze this in a ton of ways. So for this week, my win rate was 57%. My biggest profit was 11%. My biggest loser was 13%. My average return overall was negative $20. which isn't good, but that's not a big loss, so that's okay. 7 trades. I feel like I definitely overtraded this week. Any week where I have a trade that's not my setup, I definitely overtraded. So I have to get better at that. TraderSync is such a cornerstone in my trading. I couldn't have gone to this point without it. It's allowed me to analyze my setups, be able to categorize them, and see what works and what doesn't. The multiple ways that you're able to analyze your trades with TraderSync, now that is priceless. And that's what transformed me from a 5-figure trader into a 6-figure trader. That difference can be substantial, especially if it allows you to trade full-time. TraderSync is what allowed me to trade full-time. So, click the link below. You get a free trial. If you don't like it, you can stop using it. But I really think you'll like it. And it's been so invaluable to me that the price of it alone is 100% worth it. Many times over. We use the best educational tools to learn how to trade. We use the best charting tools to get the best charts. We use the best brokerages to get the best executions. Results are important. And the way to track results, the way to refine results, and the way to get better is to use TraderSync. I'll be getting more into TraderSync in the coming weeks, and I'm going to make more videos to explain how I use it and how it made me better, so you see the real life examples of what I've done to get to that next level that we all want to get to. That is it for the weekly recap. I hope you enjoyed it. Let me know how you like the new microphone. Is the audio quality better or is it worse? Do you like my voice better? Leave me a comment. I may have sounded like a marble mouth with the last episodes. In reality, I am a bit of a marble mouth. Just keep that in mind. Don't judge me too hard. Click the link below, check it out, and I'll see you in next week's weekly recap.